The euro currency opens up the week nudging higher, but staying within that range we've seen since that big trade up to 110 a week ago on Monday. Recall a week ago we saw the euro rally up to 110 for the first time since January. Since then, it's been kind of a pullback and a range-bound trade between 109 and 109.5. Today was no different. We see the euro holding steady right around 109.30, up slightly to start the week as the dollar continues to be the focus. The dollar, which has whipped around based on upcoming Fed rate cut expectations, has been sort of dictating the trade. The euro has been following again. The euro seeing a slight nudge higher to start the week today at 109.30. Now, what does this all mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see the volatility spiked higher again when we saw the euro get to 110. Since then, it has backed off. It backed off pretty quickly as we now remain range-bound. However, we start the week trading unchanged as the market kind of looking ahead not only to the inflation data in the United States, but also as geopolitical risks continue to rise. We're seeing an uptick in volatility across all asset classes. Lastly, let's talk about positioning and what are speculators doing. Well, as of last Tuesday, after the big move, we saw speculators adding to their net long positions. Now, speculators have been back and forth. They were long, they got net zero, then they got long again and net zero. Now they're slightly long. It'll be interesting to see how this plays out. A lot of this based on those Fed rate cut expectations, which have been all over the map. Right now, the Fed expected to cut rates 25 basis points with about 50-50 odds that they cut 50 at the FOMC next month. And the dollar has really been dictating that trade again, as we've seen the dollar moving higher, lower, and then recovering. We've seen the euro doing the same thing. So opening up the week, we see the euro moving higher slightly, but holding on to that 109 to 109.5 range ahead of tomorrow's key PPI inflation data.